special shout out to our sponsor, Qualia. Qualia is the category-creating digital closing platform used by thousands of lenders across the country to seamlessly work with their title and escrow partners. By working better together, Qualia is powering lenders to deliver a differentiated closing experience for their clients. Through real-time communications, closing status updates, and workflow management, Qualia brings lenders together with home buyers and sellers, title and escrow agents, and real estate agents for a secure and seamless closing experience. Qualia is proud to have been awarded the Housing Wire Tech 100 Award for real estate, as well as CB Insights FinTech 250 Award. Discover how you can work more efficiently with your title and escrow partners at qualia.com/innovators. That's QUALIA.com/innovators.
Greetings. If this is your first time joining us, welcome to the Mortgage Innovators Podcast, where we deliver fresh and hopefully fun and entertaining insights on all things mortgage and the innovation that's propelling our industry forward. I'm Margaret Chiavini, and I am with New Res Correspondent Lending. And every Tuesday, you can find our group of rotating co-hosts, or what our producers have dubbed the Innovative Five, who all share their own unique connection to the industry. We always have fantastic topics and conversations on this podcast. Before we get into that, though, I just want to make sure that all of our listeners know that we are planning our Mortgage Innovators Conference in 2022. The theme is the power of innovation, and what better year than 2022 to really focus on the power of innovation. We're back in person, and it's an experience you definitely don't want to miss. You can join us May 2nd through the 4th at the Hilton Anaheim. And for the latest information on registration and sponsorship opportunities, head to mortgageinnovators.com/conference. That's mortgageinnovators.com/conference. Okay, well, now on to our episode. We have a fantastic episode today and a great conversation. It's going to be on insights for improving your tech stack in 2022 or your tech assessment in 2022. And this week, we actually have a very special co-host, Ty with Qualia. And you all know that Qualia is our sponsor for this podcast. So Ty, thank you for being here, for being our sponsor. We always love your perspectives and your insights. So love that you're going to be joining us on this conversation.
Well, thanks again for having me, Margaret, and Happy New Year to everyone. Looking forward to chatting.
Absolutely. And of course, we are so lucky this week to have Dan Cantanella. Dan, greetings and welcome back.
Thank you, Margaret. What's the over under for when Happy New Year becomes annoying? We're having a big debate internally, and some people think it's the end of January. I'm more of a end of the first week in January guy, but I don't know.
My take is the end of January. In
All right.
other words, up
You're on
to
the end of
February 1.
All right. Happy New Year then.
Yeah, Happy New Year. And then, of course, our other fantastic co-host, Michael Guidotti. Michael, always wonderful to have you. Welcome.
Thank you for having me. Over here, it's the debate of, is it Happy New Year or Happy New Years? So at least you guys are going with the timeline. We're going with the vernacular. So we'll figure it out together.
That's awesome. Awesome. Okay. Well, let's get on to this topic because, in 2022, our listeners are really being asked to assess their tech stack and really to look at what are the friction points, what are the loose ends, what are the best practices. We all know that 2022 is shaping up to be a very challenging year, and we really need to understand how innovation and technology can help us with that. So that's going to be what our topic's about. So many executives and organizations are being asked to reduce costs, where to invest and where to cut. So within the context of assessing the tech stack, how would you share your insights on that topic? Where do you cut? Where do you invest?
So yeah, I mean, we're 2022 is, like you said, is shaping up to have its own challenges. We're coming out of a refi boom, moving into a purchase market. We got rising interest rates. Estimating volume decreasing somewhere around 25%. Different volatility in the marketplace, especially we've seen that over the last several weeks in the new year. And I think we're all being asked from our executive teams is, where can we reduce costs? And, I think for us, it really starts with, evaluating your current, tech stack and making sure you're looking at opportunities where you can, align with different business objectives for the year, and where you may be able to reduce costs and or eliminate, certain components from your tech stack that aren't, providing much value. So, taking all those industry themes for the year and really doing a full stack assessment, and, start by just ranking, the value that each of those, each of your tech stacks brings to align with what the industry's trends are going to. I would also, one of the things that I also find valuable is making sure that you're having those same conversations with your key vendor partners. We're in the trenches, and I'm sure Ty would agree. He would probably appreciate all those insights that as we're in the trenches every day with our sales force and capital markets and different team members, bring those insights to them so that they can have those same conversations internally. Maybe it's something that they're working on to strengthen referral partner relationships. Obviously that plays a key role into moving into a purchase market. So the vendor conversations that I've had around some of our themes that we're seeing and where the market's going have been perceived very valuable to those vendor organizations, to make sure that they're having those same conversations internally as well, so that they can shape their product roadmaps along those same lines as well. So review your tech stack, look for opportunities, align your product roadmaps with those market themes and your own organization's business goals.
That's great. Dan, I love that you talked about talking to your vendors, because when, several episodes back, we talked about that when you're picking a technology and you're picking a portion of the tech stack. So I like that really is a standard practice, a best practice that, goes all along the life cycle. So Michael, you're in charge of that, your company. What do you say?
Yeah, so piggybacking on what Dan said, additionally, with us looking for duplicate functionality, I think over the last couple of years, right, people may not have been as focused on, where's this going to fit in long term? We just need it right now. And so you end up with systems that have duplicate or similar functionality. I think additionally, doing a full assessment of what utilization are you getting? If it's a great tool, that's awesome. If nobody's using it, then are we keeping it? I think that's a key that we're kind of looking into as we head into Q1 of 2022. And I think dialing it in with the vendor partner conversations is, understanding that where you start with people isn't necessarily where you're going to end up. And so many of our vendor partners have branched out and they're building out additional functionality. They're looking to kind of disrupt other spaces and where they just started. So it could be something where you're able to leverage a larger relationship with one vendor to maybe replace another. And again, it's maybe around less logins for your loan officers and sales staff, having one central kind of area that they can log into and do, multiple things across different platforms. So I think it's, those are some of the key items that we're looking at, from our perspective. And I think it's going to be interesting to hear kind of Ty's take, from the vendor side of, what they're hearing and seeing in some of their conversations, and if that's in line with what, Dan and I are seeing.
Yeah, you brought up some great points, Michael, and to echo both, Michael and Dan, that's one of the first conversations that we have, whether it's with a new lender that we're working with or an existing, customer of ours, is what are everyone's goals moving into 2022? Obviously, we're seeing the margin compression, we're seeing the move to a purchase market, and so what's the overall impact on a lender right there? The first thing that we actually look at, and when we get in discussions with vendors, is what's their overall percentage of technology spent across the organization. So I always try and go back to look at the data, and if you look at the data in the industry, anywhere, some lenders are 4%, some are upwards of 18%, and some of the larger IMBs are 24, 25%. So that's one of the first things we really focus on, is what is the distribution of labor overhead as compared to your tech stack, and then based on that, are there opportunities to not necessarily replace labor, but reallocate employees to higher to areas that have higher production, and replace some of those more manual tasks right there with technology to automate that. And then ultimately that's also going to bring scalability. So as volumes increase or decrease over the next couple of months, couple of years, it's going to allow the scalability and then to utilize those resources in a much more high impactful nature.
Hey, Ty, when you talked about that and you said, some IMBs are upwards to 24, 25%, are you talking about in terms of the actual duties of getting a particular job done? How much is done by a person and how much is done by a technology? Is that what you mean?
Correct. So when you just look at their overall mortgage department spend or overall spend, what percentage of that is on technology? What percentage of it is on, let's say, LO comp? What percentage of it is on, personnel and overhead administration costs, and breaking that down. And it's really interesting if you look at the banks, the IMBs, and the credit unions, and then if you look at SMB, mid-market, enterprise, all fit into a different range, but the data is with those large IMBs, they're spending a lot more on tech, and that's also, I think, why they're able to, move a lot quicker and make adjustments much faster, because they do have technology that is scalable right there.
Wow, that's great. So one question that kind of came up as all three of you were talking, as you're making these assessments, and Dan, you talked about ranking the value, and Michael, one of the things you brought up was the utilization. Yeah, it's great if it's a wonderful technology, but if nobody's using it, why are we spending the money? And then Ty, what I love is you're always helping us to go back to the data, look at the data. You can make powerful assessments, when you have the metrics. My question is, while you're doing the assessment, who in the organization is part of the group that you bring together to make that assessment?
Yeah, I can speak for us. It's really our production leadership, our leadership, as a company as a whole, but then it's also including our advisory council. That's our top branch managers, because perfect example would be some of the utilization challenges we've had over the last year and a half, 2 years. It's not from a lack of want, it's from a lack of hours in the day, right? We're coming into this period right now where people over the last 60, 90 days are just coming up for oxygen for the first time in the last 2 years. So, we also don't want to just throw a tool out like, hey, we didn't get good, adoption over, 2021. And it's like, okay, well, it's also, let's look at the, entirety of it, and it's also some other conversations, right? Is it maybe offsetting some of those costs, or talking to them and they're like, we feel that this is really valuable, but we haven't had time. You rolled it out during that period and we didn't have time to train to it. So give us a quarter, give us some time, allocate some resources to help get us up to speed. And then let's really do a true assessment, at that point. And that's where we're kind of leaning on, as well. And then also while acknowledging, a lot of these are contracts that you've already got. So it's not even like, okay, I can do an assessment today and say, okay, I don't have the adoption that I want, but I'm still in contract for another, 12 months. So it's not like I can just cut that cost tomorrow. It's kind of already a sunken cost. So, I need to do maybe a better service to my sales staff by really rolling up our sleeves, training them on it. So by the time that we come to contract renewal, I know at that point what it really looks like and whether we should keep it or not.
Mm-hmm.
Yeah, I'll piggyback on what Michael said. I agree with everything he said. I think data is really key as well, and making sure that when you have those conversations, you can present the data and the metrics behind it. And as we all know, some tools are better to extract the data that we need than others. But any type of data you can provide, so you obviously know, when you sign that agreement and you got into a relationship with a partner or built some sort of tool, what your goals were trying to get out of it. Maybe it's a verification tool to try to reduce cycle times, or make your underwriters more efficient. So depending on who ultimately, technology may be owned by, us individuals as technology leaders, but obviously you had, key stakeholders within your organization, whether that's production, operations, and other leadership, that obviously if you're going to recommend a transition or a change, you want to have those conversations, and being able to provide that data when you have those conversations is certainly key. So just making sure you're, one, tracking the right set of metrics to whatever you deem as successful for that tool, be able to present that to those executive leaders to make sure that you're making a uniform decision.
Yeah, I love that. And Michael, I love the fact that you bring your main stakeholders in, and someone that actually can hold the role and the position of being able to help understand there might be other factors to an underutilization relative to the goals, as you said. Hey, Ty, what about from your perspective? It's so fun having you because, you're representing really the vendor side of, the equation. So I'd like your perspective. And if one of the things you could touch on is, when you're having the conversations, who in your organization do you bring to the conversation to have with, your customers?
It's a great question. And the fact that Michael brought up, the assessment of utilization, I think is really important. It's something that's very overlooked. You can have the greatest tech stack in the world, but if nobody's using it, then it doesn't really matter at the end of the day. When we're having conversations, I think, I'll echo what both Dan and Michael said, that we're, having conversations, most often with executives. But I think it's also really important to consider, this is something that we're really doing or trying to make a major initiative this year, is having conversations with the folks that are in the weeds and actually feeling the pain and doing the day-to-day work right there. So what we're trying to do is have the conversations with the folks that are utilizing or going to be utilizing technology, understand what the business challenges are, understand what the ultimate business outcomes are, because for them it's going to be very different than for an executive or for a mid-level manager. So for us to help have the conversations when we go into an executive conversation, we already know the challenges that are being being faced, on the front line right there, and it's much easier to go in and then ultimately drive data to have a business conversation based on, okay, here's our objectives, what are the outcomes based on the data that we have available right there.
I love that you said that, to having the conversation with the folks that are in the weeds using it. When we think about very powerful organizations that are really successful, a lot of times the leadership, they have a standard practice, which is to go 2 layers down and talk to people that aren't their direct reports, or even their direct reports. It's 2 more down, because they learn so much about their organization, about what's working, about the challenges and everything. So I like that a lot. Do you guys mind if I switch gears just ever so slightly, still, of course, on this fantastic topic? And that is, we have pre-deployed and approved applications, and sort of this idea whether or not we fast track them or whether we eliminate them. And I wondered if you could talk a little bit about that. First of all, just, for me and also for our listeners, what do we mean by that? Pre-deployed, approved applications. What are the distinctions for that?
So pre-approved deployed applications, I would probably, in that context, I would probably classify it as something that, you would put at an enterprise level, something that you may eat at a corporate level. You're not going to allocate back down to branches or channels, but it's something that, you would believe is so valuable to the organization that you're going to make it part of, I'll call it, part of your core tech stack, that you just believe, should be, a standard platform and almost forced utilization. So not optionality, something that's going to be forced and just truly believe in that brings enough value to the organization that's just part of your standard tech stack.
So really, that's kind of anytime you have that type of topic, it's really about almost the infrastructure fundamentally of the organization and what they're going to be.
Yeah, I'll use a CRM or even a a e-closing platform. I mean, those are, you don't want to have, typically don't want to have 15 different variations of those things, or you're not going to be good in any of them. So, those would be, core costs, no different than an LOS system or potentially even a point of sale system. If you want to be really good at any of those things and really tightly integrate those into your tech stack, then you're probably not going to have 15 different variations of those things. So those would be good examples probably of what I would deem, an enterprise platform.
Gotcha.
Yep.
So don't have 220 in one room and 110 in another, huh?
I don't know about you guys, but I've been there before and that's no fun.
Yeah.
Michael, any thoughts on that topic?
No, I think just, when you are going down that road, and I think that there's pros and cons, and also too, right, based on your size of your organization, all those types of things that, you're going to need to take into consideration. But yeah, I think it's that you do have to consider that in certain cases. But I think those are the times where it's really, really important that you get it right. Because, if you're going to go to the extent of, kind of, building something into your workflow, to Dan's point, that's a non-negotiable. This is like our LOS, or this has to be done before these milestones are hit. You're going to have that scrutiny anytime something goes wrong there. And if it's not working correctly, or if it's not adding value to the end users or to the customers, you're going to hear about it, even if it's something that you're kind of covering as from a cost perspective. Because anytime that you're doing a workflow change or anything like that, right, it's perceived pain. Even if it's going to make it better, perception is, you're changing up my flow, and this is going to set me back for some period of time. So I think it's just, again, involving that sales force, or at least your advisory team in that. So then it's like, hey, we made this decision collectively because we see this value, versus kind of the corporate down mentality that typically gets a lot of pushback.
And to, I think, piggyback off what Michael was saying, I love that thought process, but to take it a step further, and again, going back to the data, it's why are we doing this? So as you're rolling this out, conveying that to your team, to your branches, to whoever that is right there, that here's the reason you're doing it, and here's the impact it's going to have on your business, based on other success stories from other lenders or whatever the data points say, because people ultimately, nobody likes change, and it's hard to force change upon people. So really making them understand why it's important to their business and how it's going to impact their overall experience in the long run.
Wait, salespeople don't like change?
Nobody likes change.
I love that.
No, totally. You better have the benefits that it's going to bring to the organization and to each individual before you go present the solution. That's for sure.
Yep.
Wow. Well, gentlemen, as usual, just a fantastic conversation. Thank you for giving us a lot of very practical, useful information as we assess the tech stack. And then I loved the idea of, as you said, Michael, changing workflow, almost making a distinction between what is structural and really going to involve the changing of how things are done versus can we tweak here or there to achieve more efficiency or reduce costs. So thank you for that, Dan. Michael, always wonderful to have you. And Ty, we look forward to our once a month treat where we get to visit with you. And I thank you for your insights today on this topic. So for all of the listeners, thank you for tuning in to today's episode. If you like what you heard, please make sure to subscribe to Mortgage Innovators YouTube channel or wherever you podcast. Until next time, so long.